If you invested $1,000 in Skillz stock when it IPO'd in April of 2020, you would have just $60 left today. So what happened and how did the company lose so much value in such a short amount of time? I'm going to talk about that in this video, hopefully to help you avoid these kinds of disasters in the future, as well as I will answer if Skillz stock is now a buying opportunity. So I'll do all of that in this video, so let's begin. You're not going to want to miss this. Skillz stock price chart since it IPO'd, you notice the initial explosion in stock price where the value increased by more than 240% to sky high valuations. In my opinion, the price should have never gotten that high to begin with, but that was the case for many investments during the late 2020, early 2021 time period. There was a lot of investments that I felt should not have increased in value as much as they did, but that was the investing environment in that time. There was a lot of fear of missing out. There was a lot of stimulus money in the economy. There was a lot of people spending time at home who wanted to play around with the stock market. Interest rates were extremely low. So all of those factors played into some stock prices exploding in value when they should never have gotten that high to begin with. For Skillz specifically, what was working well for the company in the beginning was that people were spending more time at home, and that was great news for Skillz because Skillz is an online or mobile gaming platform where people can play games with each other and wager on those games, right? So you can put a $5 bet when you play Skillz, and then the winner of the tournament gets to win all of that money. Now you might ask, isn't that gambling? That's the unique advantage for Skillz. That's what had some investors excited about Skillz, was that the company's not regulated like a gambling company. Even though you could put money and win money, it's not regulated like a gambling company for the specific reason that the games on its platform are determined by skill and not by chance, meaning that the better player will win the games on Skillz platform when they play against other players. So skills are the determinant of who wins rather than luck, right? So gambling is more clearly defined by chance and luck, whereas Skillz says it's more skills based, right? So that's a gray area, as I'm sure you noticed while I was explaining that. That's a very thin gray area there between gambling and where Skillz operates. And in that gray area is what could be what could have caused a strategic mistake from Skillz management. So as you're becoming aware, there is that gray area, right? So that's a gray area where even you and I are kind of like, really? It's not a gambling company? You're telling me that I could place a bet and win money, but it's not a gambling company? Okay, right? So that's how perhaps some developers and other partners would view Skillz, right? So let's say Skillz is trying to develop relationships with suppliers and software developers and relationships within the industry. They probably feel the same way with Skillz, right? And so if they feel that Skillz is in a gray area where it might lose that privilege to operate in that gray area, they will be less likely to commit time, energy, and resources to develop that relationship, right? Because if you're uncertain if this partner is going to be around long term, you're not going to spend your company's energy and resources to develop a relationship with this company. Okay? However, Skillz chose a business model that outsourced its game development. So Skillz doesn't spend money on the games on its platform. Rather, it outsources that activity. So it tells developers, game developers, hey, create this game. We'll let you put it on our platform. And if it's successful, you'll get a percentage of that revenue that your game generates. So in essence, the developers are taking a chance, spending their time and resources making games for Skillz in the hopes that it becomes successful and they can make money on the back end after people start to play it and people start to spend money on that game or place wagers on that game. But developers are less likely to spend that time and energy if they're not certain if Skillz is going to be around, or if, yeah, maybe they will be around, but they might lose that operating ability in that gray area, or maybe developers don't want to participate in that gray area, right? Maybe they say to themselves, look, Skillz, maybe you're okay to operate under this gray area, but we don't want to participate. And so for that reason, Skillz has had a hard time getting any kind of traction with developers. The games on its platform, I mean, I've went on the platform, the games do not look attractive, they don't look fun, and they've certainly not attracted very many players. And so Skillz, yes, revenue increased during the earlier stages of the pandemic when people were locked down and spending time at home, but as soon as economic reopening gained momentum, revenue absolutely collapsed at Skillz. So it went from over 100 million down to less than 60 million and this is not in its most recent update, according to this data, 60.26 million. However, to generate this revenue, Skillz has spent a ton of money on sales and marketing, an absolute ton of money. More than 100% of its revenue has been spent on sales and marketing, and that's led to massive losses on the bottom line. You look here, the next chart, operating profit margin for Skillz over the trailing 12 months, negative 98% most recently, but that's just been moving downward. Straight down in the opposite direction. Even when revenue was growing, Skillz operating profit margin was moving in the opposite direction. That's precisely why, as part of my investing framework and a lot of the videos that you'll see me do on this channel where I talk about and I evaluate stocks and consider buying them or not buying them, one of the things I look at is this operating profit margin over time. Where is the direction? Even if it's negative, that's okay. But if it's negative and improving as the company is growing, that's a good sign. That's a sign that the company's demonstrating some economies in scale. It's getting better at what it's doing. It's making progress with its customer relationship. It's having to spend less and less on customer acquisition. And so it gives you, as an investor, some insight into the potential profitability of a company. But when you see something like this, like what you see with Skillz, that should be a red flag. And I've been pointing this red flag out for the last couple of years that I've been following this stock. And if you've been watching my channel, I've consistently been telling investors to avoid this stock. And the stock has just been moving downward for a long time now. And hopefully I've been able to help some investors avoid this kind of stock. But this is something to look out for, and it should be a red flag, and really to avoid these kinds of situations, because there may be some unique circumstances where companies are doing this kind of negative trending operating profit margin while revenues are look like they're growing higher, and there may be some cases where that's okay. But instead of trying to pick that needle in the haystack, it's better to just look at the overall trend line and try and avoid companies that are showing this kind of trend line in operating profit margins over time. Similarly, you can look at another metric that will double as a second check, right? So you look at operating profit margin, and then looking at cash flow from operations to sales will be a confirmation, right? If they're both in the same direction, it's a confirmation of the trend. And Skillz shows a similar trend here in cash flow from operations to sales in the trailing 12 months, moving straight downward and significantly negative, negative 72.53% as of its most recent update. And this trend line has just moved downward throughout the entirety of the data that you have, which is not too long of a data, right? The company's only been public since April of 2020, so we don't have too much data. But the data that we do have looks disturbing. So this is the reason why Skillz stock has collapsed so much and why it's lost so much value. And hopefully investors watching this video, looking at this, can have one tool they can use to help identify disasters like this one and avoid them, right? Avoid these kinds of scenarios, especially if you're a newer investor, if you're more of like a beginner to intermediate investor and you see trends like this, it's safer to just avoid it altogether. There's too many stocks in the market that are delivering better profits, better prospects. You don't need to go looking for these types of unprofitable growth stocks that are moving in the wrong direction, trying to pick that one that's going to turn things around. That's very risky, especially if you're a newer to intermediate investor. The likelihood of picking out one of those is less, the probability is lower than if you just find a quality company and pay a fair valuation for it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Let's answer if all of this is now a buying opportunity for Skillz. And looking at its valuation, it's trading at a price to sales of 0.711, way down off its highs of price to sales of over 45, which, like I mentioned earlier, the valuation should have never been this high to begin with. But even at this valuation of 0.711, I would not say this is a buying opportunity. I would still avoid Skillz stock for now. The company has made some positive steps in its most recent quarter, slashing sales and marketing expenses. Although I think I need to see more evidence of the company cutting costs, spending money more effectively, demonstrating improvements in the profitability and cash flow from operations before I can reasonably recommend this stock as a buy. So for now, do not buy Skillz stock. Stay on the sidelines. Look for better options. You'll find plenty of better options elsewhere. All right, so thank you so much for watching. I appreciate your viewership. I've got some videos popping up on your screen right now. I think you'll enjoy those. Please click one of those and I'll see you over there.